Mohnish, welcome to the show.
Meb, it's a pleasure to be here. It's been too many years, so I'm looking forward to it.
Just got back from 2 weeks on the road, so I'm a little out of sorts.
Where were you at?
So my family, my mom's side is from North Carolina. So they do an annual, it's like salmon, an annual trip back to this tiny little beach called Topsail Island. It has like one road. So we went there, saw a bunch of family, Winston-Salem. You ever been to North Carolina?
Well, I went to Clemson, so I spent a lot of time in the Carolinas. Well, I always felt when the Clemson Carolina game took place, everything changed. I mean, it literally like the sky color changed and it is just that the whole atmosphere. There's no other day like that. I mean, there's no other football game or anything else you could go there that would give you that. It was just the whole place felt completely different.
I remember receiving $2 bills when I was a kid. Never seen a $2 bill, but it had two orange paw prints on them. So I just like assumed that's what came on a $2 bill. Probably still have those somewhere. I don't even know the answer to this. How'd you end up in Clemson?
Oh, just very random. When my brother and I were coming to the U.S. for studying, we had one distant relative, and my parents asked, "Hey, the boys are coming. What schools?" This guy had done his PhD in Clemson. No, he said, "Oh, of course they should come to Clemson."
So funny.
And so that's how I ended up there. And I actually never realized I got parachuted into Clemson from Dubai and India. I actually never realized a couple of things. One is how pretty that part of the country was till I left, because I just assumed this was the US and all of the US was like this.
In a slightly different, multiverse timeline, you would end up being agriculture guy. Like that was a very big ag school, right?
Sure, yeah.
How'd you not end up being a farmer? That could have been a different path for you.
Yeah, I mean, I actually didn't even know what to study. People said computers are hard, so I studied computer engineering, and that was that. And I just kind of drifted through. I really didn't have a good idea what I should be doing or what I should be studying. So I was just, open to suggestion. Yeah, and one of the things that happened to me at Clemson is I had a deep interest in economics, accounting, business in general. My father was an entrepreneur, so I tried to take as many elective courses as I could in the business school. So I used to just look at whatever I could take in the business school just because I just had an interest. And I remember I was taking an investing class. I was like a junior or something. I was taking some investing class. It was actually, I didn't realize at the time, this was 1985. And, the markets has just started to turn, right? I mean, 82 onwards, they started to rise. The professor got us all a, student subscription to the Wall Street Journal. And then I remember we used to he was doing these case studies like Disney, for example, some of the parts, everything was, I mean, I was just surprised how cheap things were. I had 106% average in that class going into the final. And so the professor called me to his office. He said, I was really surprised. I looked you up that you're not a business major and you're topping my class. He said, I called you here for two reasons. He says, first, you don't need to show up to the final. You have an A. Okay, so you're exempted for the final. I said, okay, that's great. One less class to worry about. And the second is, he said, I think you're in the wrong major. He said, I don't know what kind of engineer you're going to be, but I know you'd be great at investing. My perspective at that time was that these business school students were so stupid. They were so dumb. My perception as a 20-year-old was when I used to go and take my engineering classes, I was really challenged. They were really tough classes. But the business school, it came so easy to me. It was a cakewalk, So I'd say, I can't have a major with these guys. That'd be terrible. So I just said, well, thanks for the input, but I'm just going to stay where it is. And then, after 9 years after that, 8 years after that, is when I heard about Buffett for the first time. And then I did a pivot about 13 years after graduating. So it's funny, I kind of went and caught the year around like this instead of just going straight and that way. So that was kind of funny.
I mean, that was another serendipitous, right? You came to Buffett just through grabbing a book, right? I mean, I feel like I almost remember you're you're on like an airplane and just grabbing a book or something. I mean, if I wonder if you end up grabbing some other book, maybe a romantic novel or something, you'd be a romance novelist at this point. I don't know, but it's funny the
No, I think it was that I think the data points were already there when I was doing my undergrad that I really liked the stuff. It's just that I had a mental block and I didn't know what to do with, going into investing or whatever. I knew that I was on a student visa, I need to get a job. It would be easy as an engineer to get a job. And it's really after a few years when I realized that no, when I especially read the first Buffett biography, I felt like a lot of it was speaking to who I was. I found a lot of commonality. About 8 or 9 years before I heard about Buffett, I had started playing bridge and I loved playing bridge. And then I find that he's, even now, he's playing bridge 3, 4 nights a week. And bridge really correlates a lot with investing. I was always drawn to probabilities, math. I grew up with the entrepreneur father, so I was always, around business and all that. So there's just a mix of all of that just worked for me.
it's funny about the bridge topic because so I'm 46 and I feel like there's like a line somewhere around here where the generation that's slightly older than me, all the way through my parents' generation, like my parents met playing bridge, right? I have never played bridge in my life. I played like every card game. I grew up playing, my grandmother called it 21, but blackjack and spades and poker and on and on and on. Love playing games. And by the way, Monish has a request on Twitter, listeners, for a solid ringer bridge partner. What was the request for this, playing the Swiss team or something? What was the?
Yeah, yeah. So actually, I just spent a week in Chicago. So the ACBR, American Contract Bridge League, has three national conferences every year in the US, spring, summer, and fall. It's the first time I went to a bridge tournament in like 20 years. I mean, I'd been, busy with the family, playing online, etc. I hadn't gone to actually live bridge in a long time. So I said, you know what, I'm going to take a week off and just go play live bridge. And I didn't even know whether I would like it because one of the problems with playing bridge live is it's a lot slower. Online, everything, no, it's slower. You have to do it on their timing. You have to go to a particular place. And what I found is that it was a blast. I mean, I really had a great time. And I didn't have a partner, so I had to do a pickup partner at a partnership desk. And I didn't want to, there are two kinds of, I mean, there are many different bridge games, but you can play pairs where you and your partner play a bunch of other people and whatever, or you can play teams. And it will take some time to describe, but it's a 4-person team. So I had the partner, this guy was a good guy from New York. And then every day we were finding two others to make up our Swiss team, which is a particular kind of a game which is difficult to play online. You really have to play in person. And Swiss teams is just a blast. Basically you're just the format is really good. And what I felt like, I said, what would really enhance this is if I had a regular partner, because in bridge it takes a long time to build a compatibility and understand what your partner means and all of that. It can take years. So I said, if I can find a great partner and then we can have a great team, 4 people who actually play 2, 3 times a year at these national tournaments, it would just be a blast. So the funny thing is, what really surprised me, I have 188,000 Twitter followers. I have 50,000 followers on LinkedIn, and I have about 5,000 on Facebook. Okay, not one person. I sent them. I was shocked. I thought I'd get inundated. Okay, and this is a smart investing crowd. I mean, the people who follow me on Twitter are interested in investing, and zero. I was just shocked at that. And even when I go to the bridge tournaments, you see a few young Chinese kids. You see 12-year-old Chinese kids, 15-year-old Chinese kids. You'd see a couple of Indian nerd kids. But then the rest of the crowd is an over 70, over 80, oxygen tank, over 90.
What is the reason? Because there's other games that have translated to the younger crowd. I mean, poker certainly has had its moment. I mean, a lot of interest in clearly games in general. What about bridge?
I don't really understand it. I think it's such an amazing game. It's a game that you can never master in your lifetime. It's a game that will give you so much joy and pleasure. I think the thing is, for the younger crowd, there are so many options that weren't there for your parents. The range of options with video games and everything else that they can do with all the distractions with the phones and all that. The interest level is not there, which is really sad. It's actually a really good game. It's a wonderful game, and it's a game that'll give you a lot of pleasure. I was really surprised that it happened to me. I feel like Forrest Gump, that I spent a few years playing bridge with Charlie and his friends. I have to pinch myself because that was a blast and a half. And one time, quite accidentally, I played bridge with Warren. The thing with bridge is that when you're playing with someone, you really have to have an understanding, right? The conventions. And Warren and I start playing together online, and there's a chat box. You can even chat with your partner and others. So I'm like really quickly trying to message him, trying to get his conventions. He's saying, "Yeah, I kind of play that. I don't play this." And I'm saying, "I'm going to like blow this game so badly that he's never want to have anything to do with me." And we actually, and the funny thing is, the other two people we were playing with had no idea that it's Warren Buffett playing. Okay, because his handle is T-Bone, and people don't know T-Bone is Buffett, right?
They do now.
But we whipped it. We really, really amazingly. I didn't screw up. We did really well. And then 3 days later, I get a message from Buffett's assistant. So when you play online, you can go back and review all the hands. You can do everything. There's a record of it, right? Which you can't do live bridge. So I get this long email from his assistant, Debbie, saying, "Hey, Warren really enjoyed the session with you, and he was really impressed with the play, and especially, board six, the way you did the bidding, and then the kind of end play with the hands and all that." And I said, "He's got like a zillion other things to do. He's going back and reviewing the hands."
Come on, T-Bone was going through those, and he's saying, Mohnish, board 4, I don't know. We may have to evict you as the partner. Your bidding was a little suspect. That's funny.
Yeah, exactly.
Well, I'll try it. I've never played, but I love games in general. Leading into that, if you were to go back and teach, I mean, I know you do a lot of student Q&As and talks, but, one of the things, we don't really teach money in schools in the US. It's starting to. I think it's like up to maybe a third of high schools teach some form of personal finance, and investing is sort of like a rounding error of that. But what would your kind of idea or advice as you talk to your kids, your friends' kids, college students today? How do you put them on the right path? Or if you're an administrator of Clemson, let's say the president of Clemson's like, "Mohnish, we really gotta, lay this out the right way." How would you think about it? What would you say?
Correct age to start this is in high school. I think like 9th or 10th grade is just perfect. And it's really a big failing of the education system that it's not given, because it wouldn't take much time. It would not be a very long curriculum or course or even a discussion. But the important thing to really get across is the power of compounding. And what Einstein says, the eighth wonder of the world. And the thing about compounding is we are all taught compounding in math. We understand from a mathematical point of view what it is. From a money point of view and impact on your life point of view, because it's on a log scale and because of how the numbers change over the decades, no one ever goes through that. So just the simple thing about the rule of 72, about telling people, look, if you have a 10% return a year, your money doubles every seven years. If you have a 7% return, it doubles every 10 years. And even if you get a 7% return, the power of starting early, basically it's how many doubles. That's, we know that, but the high school kids need to know that. And what is lost in all of this is that if an 18-year-old is fully familiar with this, and he or she knows they have a 60, 70, 80-year runway, you're even doing, like 10% a year or something, or somewhere around that, you could have close to 10 doubles in a lifetime. 10 doubles is 1,024. I mean, whatever you save at the age of 18 is multiplied by 1,000. If you saved $1,000 when you were 18, that would be $1 million 70 years from now. And at 19, you would save some more, and 20, you would save some more. So the important thing about spending less than you earn putting it into a compounding engine and not messing with it. People have 401ks, they leave jobs, they go to Hawaii, they pull all the money out, they pay a penalty, and then it's gone. And then by the time you get to 70-year-olds, their 401k is $40,000, or $100,000, and it should be in the millions. This is such a simple, low hanging fruit.
But there's this very obvious challenge, which is 18-year-old me wants an iPhone, sick new truck, go out with my friends. I want to go on spring break, new surfboard, whatever it may be. There's the allure and seduction of the hedonic treadmill. Like, there's the people that get it. So let's ignore those. That there's a certain percentage that hear that statement. They hear you talk to their high school class and they're like, damn it, I'm in. Like the Buffett inoculation. They heard it once, they're in. But for the vast majority of everyone else, having some sort of like a Thaler nudge behavioral system in place, because a lot of it right now is opt-in, as far as retirement.
Yeah, so the first thing is it becomes opt out. It becomes opt out. The 401k money gets taken out. You don't get to see it. It goes automatically into an index if you do nothing. And you cannot take a loan against it unless it's really important and there's some real hardship. It's complicated to opt out. I mean, you just put those pieces in place and the employer match goes in, and that you cannot even pull out no matter what. It's too easy to shut off the engine today or to not even start it.
There seems to be ways that the capitalism, free market could solve this, presuming the government doesn't get its act together, but TBD.
But also what doesn't happen today is even when people join 401ks, whatever else, nobody really explains the logarithmic nature of compounding. They just say, oh, you do this and you get 10% a year or whatever else. And no one really connects the dots. It's that piece is just left hanging to figure it out on your own. And even for me, I was always great at math and all that. It was surprising, when I actually studied it and I looked at it and I looked at Buffett and looked at what he had been doing. It was a revelation for me. And I mean, I was always good at math and I was always good at probabilities, always understood all that, but I still never really properly understood it.
Yeah. Well, let's use that as a segue. I want to hear a little bit about this big school initiative that you've been doing. Well, how long now? Is it 10 years now?
It's now 16 years.
Wow. I was actually watching one of your YouTube videos and it's fun because the comment sections, which some reason on YouTube are actually like very pleasant now. One of them was a doctor who said I had actually been through this program. And I was like, how amazing to read finally the fruits of doing this for so long. Tell the listeners what I'm talking about and give us kind of an update and overview of what's been going on there.
Yeah, actually our oldest alums now are 32 years old and they're starting to make their mark, which is really fun to see. But basically the idea is that we identify very poor kids who are really bright and we identify them between the age of 16 and 18. And we spend 1 or 2 years with them. And we basically prep them for the engineering and medical entrance exams in India. And one of the things about India is that the engineering and medical schools are really good. They are run by the government and they are pretty much almost free to attend. Basically, very heavy government subsidy. But getting into those schools is really hard. It's very competitive. So, for example, the IITs, Bill Gates says that if he was only allowed to recruit from one school, he would only recruit from the IIT. So the Indian Institute of Technology.
I've worked with a couple of IIT guys, and they are definitely smarter and more capable than I am. I'll give them that. They negotiate every single possible thing in the world, even when you're not even supposed to be negotiating. Extremely capable.
Well, there's 1.3 million kids, 18-year-olds, who take that entrance exam for 16,000 seats. So it's a 1.3% admit rate. And if I look at Princeton, it's a 5% admit rate. Harvard is a 5% admit rate. And the thing is that they give priority to legacies and they give priorities to all kinds of donors and whatever else is going on, which now they're getting clobbered on the head by. But the IITs are purely a quantitative measure. It doesn't matter if you are the prime minister's son or daughter or the richest person in India, whatever. or how much you're willing to donate, it's based on your test score on that test. That entrance exam test is the hardest test in the world. If you score 34% on that test, you have a seat at IIT. Okay, you just need to get a third correct.
Kind of makes me want to take it right now. I'm a little curious to see how bad I would.
And they have negative marking. So the thing is, if you get a wrong answer, they ding you, they take away a quarter point for a wrong answer. So like 70% of test takers end up below zero. So they don't
Oh
even,
my God.
they,
That's so demoralizing.
they would have been better off just turning in the empty paper. Their score would have been higher. But anyway, the thing is that we identify these kids. Most of these kids are illiterate parents, kind of laborers, farmers, and so on. The parents don't even know what we're doing with the kids. And we bring them into a boarding school system so we can completely control, because they don't have electricity, they don't have a desk, they don't have a computer, there's nothing, there's no infrastructure where they're at. And so we bring them to our centers, which are fully equipped. We've got the best faculty, best everything. And our testing is really good, that we identify that they have horsepower. And then we spend 2 years prepping them for the test. And so the national admit rate is 1.3%. Our success rate is north of 60%. And actually, if I include the next level of schools, the NITs, which are right below the IITs, it's over 90%.
What is the lag time on how long they're in the program? Is it like 6 years? Is it 2 years?
They are with us for 2 years, and then they go into the IITs for a standard 4-year undergraduate degree. So basically, we usually start with them at 16. We're done at 18. They finish with the IITs at 22, and then they enter the workforce, and then we go from there. And basically, they've been recruited, our kids have been recruited straight from the IIT campuses, directly by Google and Microsoft and Amazon and all of these companies all over the world. They end up with Samsung in Korea, different companies in Singapore, and all over the place. And of course, all over India as well. These kids are coming from kind of less than $3 a day kind of family income. It's very, very low income. So they go from something like $1,000 a year of family income to 150, 200,000 when they start. It's a huge reset. From my point of view, it's a real zero to hero. The return on invested capital, social return on invested capital, is off the charts. And one of the things that makes Dakshana work so well is it costs us about $3,000 to take a kid through the 2-year program, the boarding, lodging, and everything. The subsidies from the government, in effect, is a 25-to-1 match. So our 3,000 unlocks about 75,000 in government subsidy, because that's the cost of the IIT degree that the government is paying for. So we are able to lift these families from poverty permanently. It looks like a magic bullet. You spend 3,000 and suddenly the guy's making 150,000. But that's because there's another 75,000 of spending. So the 25-to-1 match is really what makes it work so well.
And I think I've heard you say, you guys are starting to be a non-trivial percentage of the IIT intake each year. How many students are kind of going through the program per year now, or aggregate in total?
Every year we have about 1,000 graduates. So we are taking about 4% or so of the IIT seats currently, and similar number of medical seats currently. When we get to about 12 or 13%, we'll pretty much max out. It's very competitive. There are a lot of rich people with a lot of resources going after these seats, with a lot of brain power as well. We will not be able to take more than like 1 in 8 seats or something.
What's been the response from locally in India? Obviously, the communities which are involved in it's probably universally positive. Has Modi reached out and been like, hey, man, this is amazing. We got to help you out on this path. We see that you're doing God's work. What's been the response from government, corporations, kind of just people, boots on the ground?
Well, for the entire 16 years, we've had a huge relationship with the government. So we work with the largest magnet school system in India, which is a government school system in rural India. We actually could not do the work if we were not tied into them, because they are really sourcing these kids in sixth grade from all over the place in India with the language and vernacular. So the government actually has been very supportive. I mean, it's been a great partnership. And Dakshina, we don't really focus on trying to get a lot of pats on the back or whatever else. So we just, put our head down and get the work done. And we do get accolades from Modi and others, and that's fine. But it's all about the inner scorecard, right? We just want to basically do our work and do the best we can, and let the chips fall where they may.
Well, you get about another generation, 10 years of these, and you're going to have a bunch of these graduates starting to percolate through the ranks of corporate and government in India anyway. So we'll just have a Pabrai army of well-equipped and grateful.
And some of our kids have already dropped out of undergrad. They got funded by Y Combinator and all these, top end VCs. Some are already on their second startup and so on. So I think in 10 or 15 years, we'll start seeing some amazing stories. We're already seeing people. We have a kid at Google, and when Sundar does his I/O presentation, he's a part of that. Some of those slides are done by him. So they're already starting to make some waves, which is great.
We talk a lot about startup investing here, and having been doing that for a while, there's a trend maybe about half a decade ago where I really started to see a lot of companies. You're seeing a lot of startups have very real traction in India, Bangladesh, Pakistan, Africa, Latin America. And it's to the point now, my idea, and this is, we're going to auction off the top 100 spots. So we're bringing in 10,000 a year. So top 100, you get in no matter what, but it's going to be a blind auction. So, you don't have to name a building. We don't want your name on the building. We'll do a blind auction, but we'll be honest about it. And to me, it seems like a much more transparent way to go about these. I like the pure merit base too. That makes a lot of sense.
No, but I think your idea is a good one. I mean, I think bottom line is that college education is a lot more expensive than what the tuitions you can charge and should charge. And so it does need in some ways to be subsidized by the rich. So yeah, you can give some quid pro quo to the rich, but I think the more straightforward and transparent you make it, the better it is.
If you look back, Bill Gross, Muhammad Al-Arian, trying to think who else. Soros ever having a mustache? That male portfolio managers, when they had mustaches, were their best performing years than when they were clean shaven. And if you're watching this on YouTube, you see what I'm talking about. If you're listening to this on podcast, Mohnish has a beautiful duster right now. Do you find any correlation? Have you been putting up better years with than without mustache? Because you've been clean shaven before, right?
Yeah, I actually didn't have a mustache until about 8 or 9 years ago, maybe 10 years ago. I have never been asked that question before, Meb. So thank you. Congratulations.
We're going to have to go through the annual Christmas cards and say, did he have a mustache? And then look at the returns for the year. And then we'll do a regression analysis and we'll see what the answer is. But I feel like I have a pretty high hit rate on this.
I would say in my case, there's no direct correlation. So sorry to disappoint you on that. But maybe we don't have enough data.
We'll put some IIT interns on this and we'll see what they can come up with.
We don't have enough data because the mustache years are short relative to the non-mustache years. So,
well, I was Googling, and you'll probably know better than I was. I was trying to find some pictures of Warren Buffett or Charlie, if they ever had a mustache. I don't think they have.
Yeah, Charlie and Warren, there was only one time when Warren went through some kind of a surgery and he was in the hospital for 2-3 weeks where he actually grew a beard. And that's the only time when he didn't shave, and Charlie, I've never seen that.
That's probably when Berkshire paid their one and only dividend too, right? He's like in the hospital, came back. He's like, what's going on here? I got a beard. You guys are paying dividends. Well, I figured we would start, you, like many, there's some non-consensus views. One of my favorite Twitter threads that we ask people, and this is you say, what is a view that you hold personally about investing that the vast majority of your peers do not hold? So let's talk about like 70%, 2/3, 75%, that if you said this today, almost everyone would be like, I absolutely do not agree with you on this. Is there anything that comes to mind?
Well, there's several that come to mind. Well, the first one that comes to mind would be investing in a place like Turkey. I've been going there for about 5 years, and I've talked to a lot of smart investors about what I think were total no-brainer investments. They can't get past the country. I can't even get to the company. The second thing, which took me also a long time to figure out, I realized actually this year when Buffett's letter came out, is even Warren Buffett has only made most of his money on about 4% of the bets that he's made. It's one out of 25 bets that has moved the needle for him. And this is Warren Buffett, doesn't make mistakes and is so particular and so careful. And so investing is a kind of very unusual art where it can tolerate a very high error rate. But in order for it to work with a very high error rate, you have to have held the ones that you truly had high conviction and truly understood for a very long time. One of the extreme cases of this is Shelby Davis, the Davis dynasty. And Shelby was very early investing in international insurance companies, and he bought a zillion of them. I mean, lots and lots and lots of bets. They were not concentrated bets. A lot of them were less than 1% of the assets he were managing. Almost nothing worked. But the Davis dynasty, they ended up with a very large net worth because one worked. They were very early in AIG, and and the thing is, whether he made a great bet or a lousy bet, he just kept them all. He never sold. And so the one great bet, which was AIG, which was less than 2% of the total amount of money they had, ended up becoming 80, 90% of the fortune. It was a big fortune. And so basically, this particular notion about investing, which is, I mean, anytime we look at a business, we have a view on what it would look like 5 years, 10 years, 15 years from now. And most of the time, we're going to be wrong. That's just the real candid answer on that. And sometimes you'll be right. But to actually, harness and collect the fruits of that labor, you have to have held all the wrongs and the rights for a very long time. And that's when people get into trouble because most mutual funds, they're going in and out of stocks all the time and all of that. And the index does so well because it's too dumb to know that it owns Microsoft, and too dumb to sell Microsoft, too dumb to sell Google, too dumb to sell Facebook. And it just ends up in a place where these great businesses stick in the only time the S&P throws a company out of the portfolio is when it's so long in the tooth that it's obvious. They'll never throw out a Google until Google's lost it completely.
This concept of these power law investing, there's two groups that really understand this. I think my startup VC friends really get it because by definition, they can't sell, right? So they invest in 20 companies. They get that one or two is going to drive the returns of the entire fund. My quant trend followers get this because they've modeled it out and they see, hey, our batting average is like 30%. But that one trade on euro dollar or wheat or short bonds or whatever it was makes up for all the losers. And there's a couple good books on this, 100 baggers and 100 to 1 in the stock market. I think is hard, obviously, because of the drawdowns. Warren and Charlie have a massive concentrated holding now. And this sucker, Apple, historically, I think every decade has had at least a 50% drawdown, I think with the exception of the last one, and one over, I think, 80. How do you think about it?
I think the mental model you have to use is you have to think of yourself as the founder or the entrepreneur. So if I look at the Walton family, they're the only ones who've held Walmart from 1970 till today. They held it after Sam Walton was gone. They held it when there were no Waltons running the place. I think there might be one Walton on the board or something. And they've had no control over this business, and they've held it for the entire period. Why should an investor use a different framework from an entrepreneur? So we see this all the time, right? You see entrepreneurs have 99% of their wealth in the business they create, and they go to sleep at night very comfortable with that. People say, well, they got control. Well, control is overrated. It's not really the control. I think that the framework we have to use is to think of ourselves as, if we are not the founder, we are basically an owner or a partner. So think of it as a partnership in a private enterprise, And so I think that once you make that shift where you say that, this is a family business and I own 30% of the business, I'm not the founder, but I have a significant stake and I understand the business, then those two, the investor and the entrepreneur, start blending. I mean, we see this over and over. You see the IKEA guy, right? I mean, basically, he put the entire company into a foundation. But, 99.99% of his net worth was IKEA. We just see that with all these entrepreneurs all over the place. And they remain comfortable. If you look at the Google guys, they stepped aside, but they kept their stake perfectly okay.
Do you think Berkshire, let's say Warren says, all right, Ted and Todd, they're awesome. Mohnish, we need your help too. What do you think we should do with Apple? This is a big, big stinking part of our portfolio. Warren's like, he wouldn't say this, but I don't want to have another 1999 Coke where this thing is probably expensive. I just may, the taxes. I don't want to pay taxes. This is a good business, great franchise. What do you think you would do in their seat at this point? Would you start to trim this big position, or would you hold on thinking this might be the world's first $10 trillion company? I think first 5 trillion too. I don't think we have a 5 trillion yet, do we?
The framework you use when you are a large owner of Apple, or let's say the founder of Apple, let's say Steve Jobs' widow, for example, is not to do anything till there is a permanent secular decline. And we realize that we will not be able to cash out at the top when there is permanent secular decline. Everything at the end is going to go south. That's just the nature of capitalism. I don't see anything on the horizon that is a concern for Apple for the next 5 or 10 years at least, and maybe beyond. So the simple math that I would do if I was at Berkshire and someone, Warren asked me this question, etc., I would just say do nothing. And the way I look at it with Berkshire is they made a $2 billion investment in Mid-American Energy, which is today approaching $100 billion. It's a 50-bagger. Their railroad investment is huge, and they're sitting on 130, 140 billion, and there's 30 billion a year coming in. I mean, if you look at the entire enterprise, Apple is maybe a fifth of the pie, fourth or fifth of the pie. We don't see any issues right now. Leave it alone. Focus on the money that's coming in and putting that to work. And even if you take a situation where at some point that value declines, there are other engines there. There are other things going on there. So I think that the framework has to be that you give it a very long leash, just like the Walton family and so on.
Okay, you say, okay, I'm not going to tell you to sell Apple. However, Turkey. Now, we love foreign markets. I spend an inordinate time talking about investing beyond our own shores. Walk us through a little bit how a guy whose first checklist rule is circle of competence, right? How did this guy get interested in Turkey of all places? What was the inspiration? Were you just vacationing and you're like, man, the food here is wonderful, beautiful, great country. Let me go Jim Rogers style, go check in on some businesses. How'd you come around to the Turkey interest, and how much other foreign investing had you been doing at this point? Was it a large part of the investing strategy, or walk us through kind of how it happened?
Well, I mean, I think before Turkey, I had been investing in India. I had been making trips to Korea. I had looked at things in China, looked at things in Japan, and so on. But what caught my eye in Turkey in 2018 was their ratio of GDP to market cap. GDP to market cap is not it's not something you can always hang your hat on. But there is a correlation. Basically a certain amount of the country's wealth is in the publicly traded companies. I mean, if you look at the US GDP and US market caps, US is more than 100% of GDP is the publicly traded market caps in the US. In Turkey, it was a small fraction. a relatively very small fraction. And the second thing I noticed is that everyone had exited. Everyone and their brother had, I mean, these foreign funds, etc., had left the country. I happen to have a very good friend who's a very die-hard Graham investor. He comes to Omaha and he's very well versed in Buffett and Graham and Munger, but though he's too overdosed on Graham, I'm trying to move him over to Munger. I'm making a little bit of progress, but not enough. So I told him in 2018 that, listen, I'd like to come to Istanbul. I know the food's great. We're going to have a good time. But I just want to visit companies that you have in your portfolio. Don't take me to companies that you don't have an investment in. And I want to visit the businesses that have the largest positions in your fund. And would you be okay with doing that? He said, oh, yeah, it'd be a blast. Okay. So I still remember the first day we were going to visit the first business. He tells me, Mohnish, the PE is zero point 0.1, not a PE of 1. A zero point 0.1 means that the company is going to earn its entire market cap in 1 month. I said, does it have hair on it? He said, yeah, it has a little bit of hair on it. I said, what kind of hair does it have on it? So it turns out it was one of the largest banks in Turkey. And they had been violating the UN sanctions against Iran. And they were facilitating all these transactions with Iran. They were not supposed to do that. And the US got wind of that. And they were really pissed off. And the CFO of the bank, who really didn't have a whole lot to do with all of this, it was the chairman driving all this, had come to the US to vacation with his kids, Disney World, actually. And the feds picked him up in New York while the rest of his family watched, and they put him straight in Rikers prison. And then Erdogan is calling Trump and telling him, you got to let this guy go. And Trump is saying, it's the state of New York that's going after this, it's not me. I can't do anything. They don't listen to me. And then in the meantime, the company is trading on the market, and the US is thinking of just taking them off the international SWIFT system and everything else. So I went to that meeting. It's a very well-run bank. And I told my friend, this is too much hair for me. I can't go there. Can we just take it down a notch? We can't be doing 0.1 P. I said, at least take me to P of 1. But what I found in Turkey is that there was very high inflation that was going to persist and continue, but there were a set of businesses which were not affected at all. In fact, some of them had tailwinds because of inflation, and the baby got thrown out of the bathwater. Like no one was interested. Then I just looked at those businesses, and I had a lot of cover because my friend knew the families, knew where the skeletons were. I mean, he'd really studied these businesses a lot. And so I had like a great unpaid analyst on the ground. We didn't do a whole lot. I mean, if I look today, I made so many trips to Turkey. We have 3 investments. That's it. We have 3 investments in Turkey after probably having visited about 80 or 90 businesses there over the years. The 3 companies don't really have any correlation with Turkish inflation or anything else. In fact, one of them gets a tailwind from it because their revenues are in euros and all the costs are in lira. So they actually get tailwinds from inflation. And they were very strong businesses. So, for example, there's a Coke bottler in Turkey, and they have a very good relationship with the Coca-Cola company. Coca-Cola company owns 20% of the business, sits on the board. And you can look at Coke bottlers around the world. The economics are very similar. They should trade at similar multiples. Everything is, if the growth rates are different, you can put different multiples on them. This thing was an outlier. And, the Coke bottler, only about a third of their volume, maybe 35% or 40% was coming from Turkey. The rest was coming from things that have nothing to do with Turkey. They're the largest Coke bottler in Pakistan. I mean, they're the only Coke bottler in Pakistan, for example, and so it's huge volumes. So basically, what I found is that there were a sliver of businesses there that no one was interested in. We invested in a warehouse company. I still couldn't believe it, but liquidation value was like 600 or 700 million, and the market cap was 20 million. I just couldn't understand that. It was just crazy.
We hear the same 3 or 4 tropes every time we talk about foreign markets, but the 2 big ones is, people get so caught up in the macro, and so many investors get sidelined by it because They see what's going on with the currency, or they see what's going on with the government, or they see what's going on, all these list of things that, in our opinion, is can be controlled. How do you think about, broadly speaking, the currency side of it? Is it something you hedge at all? Or you mentioned some have even more complicated and even beneficial, parts of the hedging type of thoughts. But how much of the macro picture plays in for you guys on either dissuading you, or obviously it didn't because you do it? How do you think about the macro in places like this?
We've never hedged currency anywhere. And in some places, like in Turkey or India, etc., it would be quite expensive, and actually you wouldn't be able to do it for very long. So it would be somewhat impractical. Well, we had a view that the currency would continue to devalue quite significantly. Inflation would be high. It wouldn't go down in any finite period of time. I basically looked at businesses where those conditions were irrelevant. If I am, bottling Coke, for example, I will get paid a certain amount for someone's labor to give them a Coke. That's basically the deal. The currency is not that relevant. I mean, they're going to be able to adjust it based on whatever's going on. And in other cases, there were businesses where the revenue just wasn't. I mean, we don't have an investment here, but there's a juice exporter in Turkey where all their revenues are coming from Europe in euros and their costs are all in lira. It's not relevant to them what is happening in the country from a inflation point of view. They actually get tailwinds because their labor costs actually go down because the standard of living goes down with all this inflation. So I think the macro is important when you have these crazy things going on. I just try to kind of sidestep and look at a sliver of things because the baby got thrown out of the bathwater. Most of those companies deserve to be clobbered because inflation will clobber everything about them. The market is mostly correct about that, but it's not entirely correct. And what I found is even very smart, rational people I would talk to didn't have an interest. And that's when I could see that, okay, this is a very irrational reaction here because I know these guys are smart, but they're still not willing to even go look at it. Not invest, but just look at it.
Well, Turkish stocks certainly had a monster 2022, which I would also like to point out correlates with the mustache year, Mohnish. So where else, as you look beyond our borders, are you getting curious about what the Omaha crew is in Japan? Any other countries? How's India look? Any other places that are interesting right now?
Well, usually for me, yeah, India is also another good place because it has a lot of secular tailwinds. The whole China being in the penalty box and all of that is a big tailwind for India. And also, there's a big demographic dividend. It's only large country with a growing population and so on. But I would say in any other country other than the US, Canada, and India, and maybe some Western European countries, I need ground cover. So I need someone on the ground who really understands Buffett and Munger and understands the ground realities. And so usually I can't, like, someone send me some stock in Mexico or something, unless I have trusted people, etc. I really can't do a whole lot because I think that once you step outside the US borders, governance becomes a really big issue. The people become a really big issue. And what I found in Turkey is in these businesses we invested in, the people running these businesses, some of the highest quality people I've met. Just incredible talent, incredible ethics. I mean, one of the families in Turkey, that the one that has the Coke bottle, they have all the McDonald's franchises in Turkey. They have a big joint venture with InBev for beer. And I could see why that's the case because they have the most pristine reputation in Turkey. And all these companies, before they would partner with anyone, they do a very extensive due diligence and they had very deep comfort. So basically, it was really important to make sure that the families and the promoters we were dealing with were absolutely the top notch, highest quality. I think we ended up with much higher quality teams and promoters than I would have in the US. And those are also an anomaly. They're few and far between. So I think that when I'm looking at foreign markets, these factors, more than macro, the people become a lot more important.
We haven't even spent much time on US markets. What's the opportunity set look like you now in the summer of 2023? You find a lot of opportunity? Are you finding a lot of landmines? What do things look like to you?
I was having a very hard time finding stuff in the US, and part of the reason is my own fault, is that I'm a cheapskate. And the amazing thing about someone like Warren Buffett is he's still adding to Apple. We had a discussion about whether he should trim at the current market cap. He's still adding. Okay. And he's adding at 5 times the price he first bought at. So it's amazing that he's not anchored. It's a great skill to have to be able to do that. I did find a couple of things in the US. I was actually surprised. I found them recently, but we will not talk about it. It'll come out in the next 13F.
Well, watch your 13Fs. What's funny is that we both have been longtime followers and curious about the concept of cloning, to me. And Charlie talks about it, I think, certainly more than just about anyone. I don't know if Warren talks about it as much, but Charlie talks a lot about that concept of 13Fs. And I love looking at yours because usually there's not a lot of names on there. I mean, sometimes there's like four. We got what, Micron, Brookfield.
Yeah, we just have. I think the last one maybe had 2 or 3 names, and that was it. I mean, the thing is that we just haven't been able to find stuff, and actually, part of it is my problem. Like, I think that I didn't fully grasp how strong the tech tailwinds were, and how strong, for example, business like Amazon is. I was surprised that in Omaha this year at a dinner, I was seated next to Bill Gates, and I had 2.5 hours with Bill Gates. I was like, okay, this will be fun. And I played a game with him. I said, look, Bill, I'll mention a name of a company, and you tell me whether you'd go long or short or neutral. And he was willing to play the game. And he had. I was just surprised at how much insight he had into some of these tech names, and the way he sliced a business like Google versus Amazon versus Apple. Like, he was complaining to me. He said, I invested in Berkshire as a hedge against everything else I'm doing. And then I see that they have this huge Apple position. And so one of when I asked him about Apple, he wasn't a book. He said, look, they don't do R&D. He said, we do R&D. Google does R&D, not as well. They're kind of loosey-goosey R&D. But Apple is just, it's top down. It was designed by Steve to be one guy driving everything. And it's a very different company than something like Amazon. If I look at, for example, Facebook and Amazon, compare them, they will put throw a lot of stuff against the wall in Amazon, and a lot of small bets. And then they watch, and then they nurture the ones that are getting traction. But when you have things like Fire that Bezos loves, he'll bury it. Doesn't get traction, he'll bury it. And you look at someone like Facebook, it's one big bet. It's one big bet on the metaverse. And between the two, I just want to do it the Amazon way. I don't want to do the Facebook way. That's just all or none. And Mark has gotten that message now. I mean, now he's become a hardcore, cut the costs and, show me the money kind of guy, which is great. But it was fascinating to hear it from Bill in terms of these different companies, even the semiconductor companies. I mean, he gave me a 20-minute lecture on ASML and the technology of ASML. I mean, he just knows it down to the nitty gritty, which is really impressive. But I can tell you what he would do. He would go long Amazon. He would definitely go long Microsoft, and he would go long AMD. Those were his picks.
Well, and he's also famous because Elon keeps whining about it. He's very famously short Tesla, or has been, because Elon's always like, when are you going to close out this Tesla short position? It's like, on Twitter all the time.
Yeah, I think the whole shorting thing is a little bit dumb. And I think shorting someone like Elon is very dumb.
On the hundreds, thousands maybe of investments you've done in your career, what's been the most memorable? Doesn't have to be the best, doesn't have to be the worst, but just the one that pops in your head as the most memorable investment for you?
The thing is that what I have always found interesting is the anomalies. So for example, I remember in about, I think it was like 2004 or so. In 2004, there's a steel company based in Canada called IPSCO. IPSCO had no debt. It had $15 a share in cash, and it had a given guidance that the next 2 years' earnings were going to be $15 a share each for the next 2 years. So there was $30 of earnings coming in. The stock was at 42. So I'm saying, okay. And the reason they gave the guidance was they used to make these tubular steel pipes where they had contracts with these pipelines where they want to deliver, the pipelines had basically given them purchase orders. And so they were going to deliver these pipes and the cash flows were guaranteed. It's not like they were giving guidance based on future sales to be done. These were sales that were already done. So I said, okay, I don't know what will happen after 2 years, but I know that after 2 years, there'll be $45 of cash on the balance sheet, no debt, and the stock price currently is 42. I said, I just want to see what the stock price is 2 years from now. I want to see what Mr. Market does with this. And I just bought it based on that notion, right? And a year later, the company announces that we have one more year of visibility and we'll have another $15 a share in earnings for one more year. And now the stock is at about 70 or 80. It's gone up a bit. Okay. And I'm thinking about, well, it's a steel company, it will go to zero, whatever. It's a very cyclical business. And then it starts drifting close to 90. And I'm thinking of, taking it off. Like I said, the double in 15 months is really good. Let's move on. And then I wake up one morning and the stock's at 157. And some Swedish company offered to buy them at 160. And about 5 minutes after that, I unloaded the stock. I said, we don't need to wait for the last $3. We're done. Recently, the two stocks I found in the US, which I got very excited about, are like that. I never thought I'd find that again, where it's this kind of an anomaly where the guaranteed cash flows are exceeding the market cap and all of that. And I remember a couple of years before that, in 2001, so I had read a long time ago that the lowest rate of business failure of any kind of business that you can have is funeral homes. So if you really want to have a guaranteed long-term successful business, just buy a existing funeral home that's doing okay. And nobody goes into the funeral home business. Nobody takes a low bid when their favorite uncle dies. You just want it done right. Okay. So they have no cost pressures. They have no margin pressures. There's nothing. And I thought, okay, wow, I read that. I said, okay, that's interesting that the funeral business has got this great characteristics. And then in 2001, I'm reading Value Line. Every week I read Value Line, and I look at one of the areas, look at is the stocks with the lowest P's, right? We can't help ourselves. We always go to the lowest PE stock. And I see two funeral services companies with a PE of two of them sitting there lowest in the Value Line list. So I said, okay, maybe there's some craziness in the numbers or something. I went back and looked at those companies. They're actually at 2 times earnings. Okay. So I said, wait a minute, these businesses never fail. And it's at 2 times earnings. And I know that it's a great business. And it turned out both these companies had done big roll-ups in the business. They had a lot of debt. There was a concern about the debt. But I said the cash flows are so resilient. We don't know who's going to die next week in Peoria, Illinois, but we know how many are going to die. Okay, there's absolute certainty on that. So I bought Stewart Enterprises, a funeral services company, at 2 times earnings, and it was eventually at 10 times earnings and got to where it needed to get to. So I think the best ones are the anomalies. Like I go to Turkey, I go to this meeting, and the whole market cap is 20 million, and the liquidation value is 700 million, and you scratch your head. It just hits you in your head with a 2x4. And so those are the ones that really interest me.
Your comments, I think, are more important and profound than it sounds very simplistic. But listeners, like the concept, like you don't have to have an opinion on every stock that comes your way, and particularly the ones like Tesla. Everyone, or Bitcoin, it's not a stock, but everyone feels like they have to have an opinion on every single thing, and say like it's very refreshing to simply say, you know what, there's tens of thousands of stocks out there. I don't have to have, like Jim Cramer, have an opinion on every single one. I can just simply sit there and let them pass by, and then, on the occasion.
Well, like Buffett says, we are in a business with no call strikes. And you're not going to be struck out by letting three balls go. You can let 3,000 balls go. So we don't need to know much about anything. And Charlie brings up his friend John Arrillaga. He just invested all his life in real estate 1 mile around the Stanford campus. That's all he did. Died a billionaire. And then his daughter marries Mark Andreessen. So it's billionaire to the power of billionaire now. So anyway, what I'm saying is Arrillaga has such a tiny circle of competence. He didn't even do Bay Area real estate. Okay, he didn't do California real estate. He only did real estate around Stanford. And if you walked with him around the Stanford campus, he could point to any building outside the campus and he'd tell you everything about it. When it was built, what the rents are, what you could buy it for, everything. And so I think in investing and as well as in entrepreneurship, inch wide and a mile deep is the way to go. You don't want to be an inch deep and a mile wide. Yeah, you can pick your spots. You don't need to know everything about everything. You need to know a lot about something a little bit, and then it works out well.
Well, Mohnish, we kept you long enough. Before we let you go, what's the best place for people to kind of check in with you, listen to you, what you're up to? Is Chai with Pabrai the best spot?
Chai at Pabrai is good. My Twitter handle is good. If you're a bridge player, direct message me on Twitter. We can play together. LinkedIn is fine too. Any of those is just fine.
Awesome. It's been a blessing to catch up with you, buddy. Hopefully to see you in the real world. Thanks for joining us today.
Thanks, Meb. It was a pleasure.